It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
Hey, welcome back to the Real Estate Breakfast as we unpack the Australian property market one conversation at a time with some of the biggest names in real estate. And we are exploring the trends and what is really going on beyond those media headlines. We are off to Queensland in just a moment. The end of another working week, a Friday, April the 24th. If you're blowing out the candles today, you're sharing a birthday date with Barbara Streisand, who I saw on a YouTube video recently. She looks fantastic. She is turning 84 today. Kelly Clarkson is turning 44, and it was on this day back in 1990, you might remember the Hubble Space Telescope that launched into orbit. Now, good morning to Amanda in Adelaide. We got your email. You are a long-time listener. Thank you for that. You have thrown up an interesting dilemma. You say that you work in the tech space. In the last 12 months, you've been successful in scoring 2 jobs in Sydney. Well done. But when you consider the extra money that the job gives you against the extra cost of Sydney expenses, you have chosen to stay in Adelaide. You say that the metrics of moving doesn't add up, especially when you're getting ready to buy property in the next 4 to 5 months. And you're asking, are there other listeners finding Sydney too expensive to live in? You say that you're in your 20s and you want to get ahead, but not at the expense of getting onto the property ladder. That is with having the support, you say, of your parents financially. I don't know, you say, how single people can do it any other way. Does that sound familiar to you? If it does, you can send us a voice message using the link below, or you can send us an email, myrealestatepodcast@gmail.com, as we take you to the Fraser Coast, the sunny Fraser Coast, and to Hervey Bay. Scott Mitchell from Mitchell's Realty is patiently waiting and listening to all of that. Welcome back to the Real Estate Breakfast. Amanda in Adelaide with that dilemma. I don't think she is alone.
No, certainly not. Good morning, Craig, and good morning, Amanda. I fully relate with what she's saying, and Sydney's one of the most expensive real estate markets in the world, not just Australia. And whilst we've seen a small softening in it recently, it's still incredibly expensive market. You've got to want to probably live there and have the traffic and the population that goes with Sydney. If you can work in the tech space and potentially remotely, I would encourage you to look at regional areas which are still outperforming a lot of these capital city areas at the moment and have potentially more capital growth potential going forward. So you'll be able to afford to buy into these markets at a much lower rate. And the scope for capital growth going forward is potentially going to be higher. I don't know the tech space that well, but I do understand a lot of that work could be done remotely. So you just got to find a company that pays well, allows you to work remotely, and then you can buy a house in Hervey Bay.
Yeah, I was waiting for the Hervey Bay component to come in. Yeah, lots to think about there, Amanda, because Australia is still growing, but growing slower. National dwelling values rose 2.1% in the March quarter, and that is showing prices are still moving higher. Annual growth is sitting at around 9.9%, which remains strong, but the pace has slowed compared to late 2025. How are you finding it where you are?
That's the question everyone's asking. The state of the world is unquestionably uncertain at the moment, and the cost of living crisis is a real commodity, unquestionably. So you've only got to look at our fuel costs, interest rates. The forecasts are going to continue to increase. But those with a little more grey hair, potentially like myself and yourself, Craig, I can remember back in 1991, I went into my first company with interest rates sitting at 18.5%. And admittedly, other things were different back then, but our interest rates are still much lower than they've been in the past. And every time, if you weigh into the doomsday media, you can get a different mindset on where the world is going in our economy. But every single time we've seen media hype around property markets crashing, and in which case we've had about 3 or 4 in the last 20 years where we've had a downturn, every single one of those downturns fully recovered and went up within 3 years. That's some research I've done recently. So you just got to weather the storm. If you're highly geared or tightly geared, there could be some areas you're going to need to look at to work through any slowdown in the market. But I can't see our regional areas in particular, and including Hervey Bay, our values are not going to be going backwards is my forecast. Happy to stand by that, and we'll review that in 6 months. The demand is still there. The whole thing that underpins the national property market is we're undersupplied.
Yeah, it's just never happened, especially as you say, if you just hold and wait for the market to correct. And talking about the market, it is a two-speed market at the moment. Australia is now split into two very different markets. On one side, you have got Perth, Brisbane, Adelaide. Those markets continue to outperform. And on the other side, you've got Sydney, Melbourne, which has entered a softer phase. I think we're all talking about that with mild declines or flat conditions emerging. The boom is no longer national. It is localised, isn't it?
And again, it comes back to our regional sense. We've always talked about our local Hervey Bay market is really driven by the external markets and predominantly the southeast corner. But the southeast corners market, that area like Gold Coast, Sunshine Coast, Brisbane, the bulk of their buyers buying into that market are coming out of the capital cities, primarily Sydney and Melbourne. So when those two capitals are seeing a downturn or a decrease in buyer activity, that will ultimately flow through to our southeast corner and in turn will flow on to us as well. But the volume of buyer inquiry is still strong in that sort of 700,000 to 900,000 range, which is a competitive market really anywhere in the country. And to be able to buy a great home close to the water and having a World Heritage listed island sitting on our doorstep and enjoying one of the best temperate climates in the country, these are all bonuses with what drives Hervey Bay as a fantastic location to live and to still invest in with good solid potential for capital growth.
Yes, and you talk about the Gold Coast. Man, it does continue to surge. And if you're listening to the podcast this morning having breakfast on the Gold Coast, median dwelling values have now exceeded 1.18 million. Units are booming as buyers research for more affordable option. And the Sunshine Coast, that remains supply starved with many suburbs well above the $1 million median price. Lots to talk about when we come back. We're talking to Scott. We'll take a look at Perth, which is the standout performer after this.
Listen to expert perspectives with exclusive real estate conversations and supercharge your knowledge base with us.
And right now it's time for another 30-second property tip. We go to Hobart and we are catching up with Eddie Hugenhout. And good morning, Eddie. What have you got for us this morning?
Good morning. One of my key tips that I give to my purchasers is if they really want to make an offer and they want to win the offer, it's often helpful if you make your offer an odd amount. Don't just make it $850 because someone else might offer $850 and then it's a bit of a battle. But I'd then go into something like $852,400 or something like that just to get the point of difference, and you'll be surprised how often that will get your offer over the line. I have a number of times seen an offer miss out by $5,000, and then the purchaser says to me, if I'd known it would have sold for just $5,000 or $10,000, I could have done that. So my advice would be to you, if you're going to put an offer on a property, give it your best shot so that if you miss out by $5,000, you're not going to be disappointed.
And here is a little fun fact from Hobart this morning. In the mid-1980s, buying a freestanding house in many Hobart suburbs for under $70,000 was pretty common. And those areas now are worth well over 7 figures in some pockets. So if you were one of those people in Hobart in the 1980s, or perhaps it was your parents, well done.
Eager to expand your property expertise? Enhance your real estate know-how with us.
It is a Real Estate Friday. Scott Mitchell from the sunny area of Hervey Bay is with us talking all things property. Scott, I want to get to Perth because that is a standout performer. Perth has led the country with 24.3% annual growth through to March. Boy, it is really going great guns, this market.
We've actually had a couple of my sellers here needing to sell, and they were moving back to Perth for family and support reasons. It's like every seller, they say, we need every dollar we can get, Scott, because we're going into a far more expensive market. And they really were. They were challenged to find a home within their budget from the outcome of our sale over here. So on the flip side of that is Hervey Bay is super affordable when compared to Perth. But if you need to go back to Perth for family reasons or otherwise, you should start saving now, Craig.
Investor lending has improved, but not enough to solve rental shortages. I'm interested in your thoughts here because vacancy rates remain very low in many capitals. That means that rents continue to rise and investors are still active in cash flow focused markets. I know that the rental market where you are was tight. That's one talking point, but rental pressure is now a major force behind investing decisions.
Yeah, nationally for sure. And look, our rental market's still hovering around that 1% vacancy range, which is still super tight. But I suppose this is where you can reflect on these interest rate increases and the appetite for most lenders. You can't get those interest-free loans that most investors would rely on in the past. So most loans today are going to incorporate principal and interest. And as you look at the last three increases, that impacts also now on every borrower's capacity. So I was listening to another interview recently with a financier where they were suggesting that in the last 12 months, most borrowers have really lost in the vicinity of $100,000 on where they can actually get a loan up to. That's some of the impact is for the investor market is they're losing some capacity as to how high they can borrow. It's going to incorporate principal and interest. That's going to flow through then to investors making rental properties available to those who need to rent.
Yeah, absolutely. And Australia is still estimated to be short by more than 200,000 homes. Interesting talking point that, because the shortage is helping hold prices up even as borrowing powers weaken. And this is why values are slowing but not collapsing. And without a large jump in housing supply, affordability pressures are going to remain. Plenty of things to think about for people up and down the country. It is a Friday. Enjoy your weekend. Lots of sunshine around and enjoy the fishing.
Yeah, certainly. Look, and the weather has finally come good up here. We've had what many would call in Queensland a more normal wet summer, and it has certainly been wet up here for months. But the weather in the last week has come good, and it's been like perfect, like postcard perfect. This weather should now remain as good as it always is from now till October. Hervey Bay does take some beating, and the fishing has been good as well, Craig.
Every morning from 6 a.m, we bring you the latest real estate news with diverse perspectives from leading industry experts. We deliver the most property podcasts across Australia every week.
Australia's housing market is designed to be expensive on purpose. So people will go, is that the reason why these properties are so expensive today?
Yes, it is. So if you think about house prices as part of a system, so there are plenty of people that want property prices to go up rather than down. The people that want prices to go down are poor people, young people.
Because they, Simon, are getting older.
Yeah, and so the idea that first home buyers get older is absolutely logical. If house prices keep going up, it takes longer to save money to begin with to actually afford that home, that down payment. We are now shifting more and more into a knowledge economy in Australia. That means we're sending more and more of our young people into the university system, because instead of earning at 18 and starting to accumulate a bit of money towards a down payment, that alone pushes first home buyership towards the older years.
We connect you to the best real estate information across Australia. The Real Estate Podcast.